Hi, traders. Good morning. Welcome to this Wave webinar, Elliott Wave webinar, where we take a look at all kind of topics in this Elliott Wave series. Now we're going to take a look at how to use waves, specifically on the euro dollar as an instrument. We've been out for, or I've been out for a little bit longer than I wanted to during July and August. So we didn't have many of these wave webinars in this time frame, but luckily we're back now in September for this topic. So thanks for joining. Let me switch now to the live chart so we can take a look at that and use some practical examples for trading Elliott waves on the euro dollar. All right. All right. So I think euro dollar as an instrument is an interesting one. I know it's of course a very common instrument, but I think it has advantages for trading purposes as well. I guess it depends all about how you get used to an instrument. It helps a lot in trading it. So if you get used to an instrument, I do think it gives you a little bit of an edge, a little bit of an advantage compared to instruments that maybe you don't check that often or don't know that well. For me, euro dollar, pound dollar are the two main currencies that I analyze and review and trade. So from that perspective, it's kind of like a home playing at home rather than using a sports terminology rather than playing a home away match in a different stadium. So I think it does help. Not to say that, of course, that other instruments cannot have interesting opportunities, but I'm always a little bit more critical. I always place the bar a little bit higher. I want to have more confirmation because I feel that this is not as comfortable with other instruments as it is with these two. Now, I would say that Bitcoin and Ethereum, I would almost add to that list more than other currency pairs actually at this moment, because I do follow those a lot as well. So I think that list, that whatever list you have, how many instruments you have, can vary, can change. Certain instruments might be interesting when they are in a trend, and when they're not, it could be good to skip those. So that's something that fluctuates and changes. But euro dollar is typically always something on my list, and I know probably the best. So I think it's yeah, it's a one with maybe a slower pace, obviously, than some of these pound pairs, but it's not ultra slow, maybe as Aussie dollar. So I think that I like that particular balance of the euro dollar, and I think I know well the waves because I just keep an eye on that. So I think that I have, I have a particular sense for the direction with this pair. But of course, that's my opinion, obviously. So now with the euro dollar, I think particularly works well are when we're using waves, is 21 EMA and the breakout with that. And I think also when looking at fractals, for instance, that they work well as well. Looking for basically breakouts away from the 21 EMA. So if we look, for instance, let me get rid of all these. All right. Let's go to our SWOT candles just to make it a little bit more easier to read everything. Let's go back to the beginning of 2021. Okay. So obviously 2021 here, 2020, excuse me, strong uptrend. As you can see in those last few weeks with the 4-hour chart, we get divergence pattern between the tops, double divergence, triple divergence actually between these tops. So when that happens, of course, eventually a bigger retracement does take place, and these red candles offering a trade to the downside. But of course, if you can see, if you would have, anyone who traded these red candles would have had encountered losses. Those reversals didn't go anywhere. So reversal trades, of course, do require a little bit more patience, do require a little bit more luck, to be fully honest, and are more difficult, more experience, more skill is required. But the red candle here doing pretty well for that downside trade for a max move of more than 100 pips. But if anyone aims at just below the 144 EMA at 121.50-ish. There's a move about 90 pips or so, I think, to be caught. Then we get a pullback and a bounce at the 21 EMA, indicating a continuation, as you can see. And we get a lower low. And this particular red candle, I think, is dangerous because of the fact that we have a pretty strong retracement followed by a time pattern, 12 candles, not able to break this bottom. Whereas here, we were in the fourth candle since the double bottom. So this was still an ongoing momentum down. Whereas this, I think, was a bigger retracement. So we did get the bigger retracement. Anyone taking this blue candle, I wouldn't, because of the 144 EMA is a little bit too close, no space to that 144 EMA. And these red and blue candles are nothing more than, by the way, break above and below 34 EMA. So you can trade that. But if you want to, if you want to make it automated, then my SWOT course has these indicators to just simplify and visualize, make it more visual, basically. All right, then we get the break here. I don't consider 610 EMA that critical of a support, so I think that these red candles are fine. But there is a bit of a wick on the second red candle, so might be better to not take that wick entry and wait for the next red candle, which is this one. And this candle closes near the low, so I think that's a good candle close. The upside trade with these blue candles only had wicks, and small candles I would not trade such a small blue candles, and also running right into the 144 EMA. So I would skip the upside. I would skip this downside because of the big wick entry candle. I think this blue candle, not enough space to the 144 EMA. This red candle, big wick, and 12 candles to the bottom, so it looks more like a correction. So this is how you can kind of filter out these setups that probably wouldn't have worked well, depending on where you put the stop loss, of course. I mean, this red candle here would have worked pretty well if you put the stop loss above the top. It would still be a profitable trade, actually, but most of these would be good to skip. Whereas this reversal trade and this reversal trade here, this red candle and this red candle here would have worked out well for 2 wins. The third one here as well, yes, it made a nice dash down for about 65 pips. Then there is a correction. So if one uses a tight trail stop loss, there might be a break even or small loss. Stop loss, of course, above the top or candle high at the least. And if you don't move the stop loss and let this retracement run out, then there is a nice continuation lower to the downside. All right, so you can see that there's plenty of spot for making a good trade there. The targeting, I use Wiz or Fibs, but as you can see, there's plenty of space for the targets. If you use this, if you use a -272 target at 119.75 or the round level 120, as you can see, an entry candle here at 120, there's easily 120-ish pips, 100 to 130 pips there, or even 150, sorry, available. 145 to be precise. So that's a third win. Now, obviously, this must be skipped, this blue candle, because of the fact that the 144 EMA is there. No space. But then there's a new red candle here and here. From a timing perspective, this is a 9th candle. From a time pattern, I would not take these red candles. But this is fine because it's already more than 13 candles ago since the lower low, since the low. So this red candle is fine and it worked out neatly. So that's win number 4, skipping to one so-so trade and one loss before that. So this is how you can trade the 4-hour chart with the SWOT approach, with 4 wins so far on the 4-hour chart in about 5 weeks. The trade goes down, price hits the targets, and we get a retracement. We get a blue candle, and it should be okay with this blue candle. Although the space is a little bit tight here with 27. So, yeah, it's a toss-up, I would say. Difficult to say. Some might take it, some might not. Depends on your risk appetite. I think there's arguments for both. to be said. This blue candle I would not take right here after the gray candle because the moving averages are on top of each other. It's flat. I don't think that looks too good. These red candles, again, I think it's a toss up here. Personally, and yeah, 50-50, I would say. There are some things for it. Of course, the bigger downtrend, um, and the fact that probably this is going to into a downtrend. But I would say 50-50 now. But this would be probably a loss if you took it. This would probably be a one if you took it. So let's say both are taken in this case, and it's a 5 wins and 1 loss so far. This blue candle breaking above the 144 EMA with pretty good strength as the first candle. So looking pretty good. We got confirmation after that of a blue candle, 2 blue candles after that. So I think that's a valid entry and enough space to the upside for a push higher. This red candle is not good, I think, because it's right at the 144 EMA. So no space there. I would skip that, although it worked out. Whereas these red candles look pretty good. Everything is aligned except the 610 EMA, but there was already a bounce. So next time it should break, which it did. And it respected the 144 EMA and rebroke below the 20 EMA. So this looks good. Nice win there. 7 wins, 1 loss so far. Now, this blue candle I would skip because there's no divergence pattern between the bottoms. And this red candle looks fine to me. Breakout below the 20 EMA, stop loss above the top. And if one hangs in there, it does turn into a win, but some patience is needed for that to go down. Same with these red setups. Now, I wouldn't take too many setups in the same spot that are open. So in theory, there are about 6 setups in the same area. I wouldn't take all 6. Max, I would take 2, but those 2 would work out if patience is applied with that trade management. All 3 blue setups should be skipped because there's no divergence pattern, and the 144 EMA is too close. Only red setups, down setups, red candle should be taken, and they work out fine. 2 of those, so that's about 9-1 at this moment. Then we get the divergence pattern. I mean, 9 wins and 1 loss so far. We get the divergence pattern, so the blue candle should be fine with the stop loss below the bottom. That works out nicely for a good win, 10-1. We don't get any new setup potentially until here. And I don't know where the target is. The target, this one didn't have much space to go, but still about 100 pips should be fine for at least a break-even trade, if not more. This red candle here, there is a bit of a divergence, but I think the 144 EMA is quite close. Let me check. It's a toss-up. If it was taken, then I think a trail stop loss could be used to get about break even there. Blue candle is certainly valid. It's with the trend and makes a lot of sense. That works out well. Red candle should be skipped. I don't see any clear divergence pattern between these tops. So no setup to the downside. And blue setup is fine because there's a with the trend. Everything is aligned. 21 above the 144, above 232, above 610. I say so fast. 21 above 144 EMA, above 233 EMA, above 610 EMA. So that's fine. Another win there. This red candle could be taken as a reversal. It didn't work out. So that's 11-2, I think, in the meantime. Or 12-2. This one is fine. That reaches the 144 EMA. That should be the target. 13-2. This blue candle, ideally we skip it because of the divergence pattern. There is a risk of head and shoulders. In live trading, it's not as easy, of course, as this paper trading and back testing, or we're trying to learn, of course, from this process. And this trade, ideally we managed to filter it out and skip it, but all of what I'm showing here, of course, is easier to show when we're looking backwards. So could easily be mistaken. A mistake could be made here, and a trade could be taken, and it's not that easy to filter out so precisely, of course, in live trading. Ideally, we see the head and shoulders danger though and skip it. The red signal works out well. I think the blue signals here don't qualify because of the SWOT rules. So will be skipped. This red candles will be fine because this one breaks below the 144 MA. Nice dash down. Another win. Here, new red candles, another win. No divergence pattern. Now we do have divergence, so I think that these blue candles could be traded. That would be a loss. I would skip the red candles because of the divergence pattern. These blue candles would work out well, as you can see. Then we reach the 144 MA, so the divergence pattern is gone. It's not a factor anymore, and we can take with the trend setup. So these red candles work out fine. No divergence as yet, so I'll skip the blue setup. We get red setup. That's fine. Blue. Now we have divergence pattern between these bottoms, so we can take the blue candles and they work out fine. So as you can see, it takes a little bit of a art to skip some of these setups that are not well. With the rules of SWOT, when you're a SWOT member, you'll be able to do that better. But if you apply the filters precisely and correctly, and with a bit of a luck, you could get into I lost track, but I guess close to 20 wins and only a few losses. Now, of course, that's the ideal track record on this EUR dollar 4-hour chart, but you can see pretty good reward to risk ratio and pretty high win rate when you do that properly and well. That takes some time and experience and skill level, and anyone learning might take too many triggers and could easily add a few losses and lose a few wins, and of course, and that would bring the balance back maybe to even as low as 15-10 or even worse. But that's a learning process, and you can see that if you really apply it correctly, you can get up into 20 wins and maybe 2-3 losses. That would be the ideal and best track record possible, though. What kind of track record you really have depends on how you apply the SWOT material to this EUR dollar chart. But I like the EUR dollar 4-hour chart. You can see why maybe behaving typical like this, not too fast, not too slow. I like the instrument for the EUR dollar trading. All right, so I guess that's it. But well, I can actually look at more time frames. Sorry. I mean, ideally, I think the 4-hour chart has a lot of advantages. Daily chart could be traded too, as you can see. This red candle here, not doing that bad. The blue candle here, blue candles, red candles here, blue candles here, even these red candles, blue candles here, but they're going to be less signals, of course. These red candles I would skip because there's no divergence pattern, so that's a wave 4 pattern if there's no divergence. So we should focus on the blue candles, which appear here and here. This one, depending on where the stop loss is, probably a loss, by the way. This one here. Depends how spacious your stop loss is. If it's below the bottom, it might survive. This one is a win. And in this case, we broke above the 144 MA with the second candle, so that should be fine. Not as many setups. Let's take a look at the hourly chart. Hourly gives more opportunities, but some opportunities are just less quality. But sometimes easier to see the chart. So we had recently, beginning of September, a fine blue setup here for this run up. In my EUR dollar video, I was indicating that this could be a good upside still for another 40 to 60 pip push, and it went more than that. These red candles, I would skip because there is no clear divergence yet. Here, I think it's different. I would consider taking a short setup if we get a little bit of retracement and then look for a bounce or second break. This blue candle is fine. Retracement, flag, and continuation. Same for these blue candles and these blue candles. Divergence pattern clearly between the bottoms of the blue candles. Reversal trades are okay to take. Downside, here we get into divergence patterns. So I wouldn't take these red candles to the downside, but these red candles here, these ones specifically that are breaking below the 143 EMA are fine for downside. Nice trade there. This upside ABC pattern, and I would have skipped that. We don't have divergence between the bottoms, so I would not have taken it. Although it would have worked out well in this case, would have missed that pretty good upside. This right here is worth taking because price is already below the 143 EMA, rejected off and bounced off the 143 EMA. So these red candles here, as it breaks below again, makes sense. That's a pretty good trade to catch there. And yeah, you got to be compared to the 4-hour chart. On the 1-hour chart, you got to be a little bit more on guard for these particular zones, and they could be very tricky. And that's why it's always good not to take more than 2 setups at the same price level, no more than 2 open trades on one time frame and one pair, because you don't want to risk too much in one particular area. Because in this case, there was no divergence, and these blue candles might make sense. So I would consider those to be losses, because I don't see any reason why one would skip those setups. So that can happen a little bit more on the 1-hour chart than the 4-hour chart. We saw with the 4-hour chart a pretty smooth track record of 20 wins versus 2-3 losses. And the 1-hour chart, you got to be extra critical. These setups could be taken, and you can see easily could turn into a loss. Although I think we have space for a very nice win here as well. And here, look at this. This is very choppy and corrective. So this could be, difficult to trade and not much to gain. When you see that, better to skip particular trading for that particular pair. But I think if we have an entry here, we don't need to add really with anything. We don't have any divergence patterns. Upside, I wouldn't trade until we get divergence pattern down in here. Then the blue candles start to make sense. Very choppy and whipsawy, but with a good stop loss and some patience with the trade management, I don't think there will be a loss there, though. Here, I would not add because of the divergence pattern present. So although it looks scary, and it certainly is scary to see this particular range price go sideways, if you focus on not over risking on one particular zone, if you focus on trading with the trend at first, if there's no divergence, and avoiding trading with the trend if there is divergence, and focus on the reversal if price is able to break above the 144 EMA or has enough space to the 144 EMA, then you can filter out most of these red and blue candles and skip most of these and focus on the ones that should work out okayish and not lead to a loss. So in this case, although it looks like a very yucky and dangerous zone, I think it should end up okay if done properly. So you see, it's you just have more areas where you got to be extra critical and extra careful. Like another zone right here. That said, this downside looked pretty well. This upside didn't worked out pretty well. This downside and even this downside working out nicely. So that's not a bad zone, actually. Here again, downside working well. Downside working well. This upside I would skip, no divergence pattern, but the downside here again working well. So there are plenty of nice trades as well, but you might run into some more struggles at times because price can be a little bit choppier and a little bit more unpredictable. But if you apply these simple not simple maybe, but these few rules, and you start to build up more experience and you kind of fine tune the feeling for it, then you can do pretty well on the 1-hour chart. I think this 4-hour chart is a little bit easier. 1 hour needs a little bit more experience, but I think you can do well on the 1-hour chart most of the time. But there are going to be moments where it could be extra choppy, and there could be a little, the chance of a few more losses is a little bit higher. Let me say this way. But plenty of good stuff here too on the hourly chart. Um, Plenty of good moves. You just will encounter sometimes these more choppier moments, and that tends to happen when you go to lower time frames. You get good swings, but more choppier. So you got to be a little bit more selective, I think, compared to the 4-hour chart. As you go lower, you can even apply the same logics on the 50-minute chart or 5, but then you got to be more experienced, more skill level, more used to these concepts and ideas to focus on the right ones, and also be aware of the higher time frames as well. All right, that's it. Hope this focus on your dollar helps a little bit. We'll be back tomorrow with a live webinar, and Wednesday with your dollar pound dollar video. And wish everyone great trading in the meantime. And we should be back next month, I think, with a new wave webinar. All right. Cheers. Bye bye. Oh, one more thing, by the way. If you want to help Elite Currency, would definitely appreciate your review on Forex Peace Army and Trustpilot. Big thanks for that. And of course, check out elitecurrency.com for our automated trading and this SWOT course or SWOT ebook. Cheers. Bye bye.